All right, let's get rolling. Get this up in Discord. All right. See how we looking here. Cool. Let's give it another minute or two for people to pop in. Welcome everybody jumping in. That volume up. Very important session today. And I'm honestly glad that, obviously I had something come up yesterday that I had to take care of, but it kind of worked out good that I'm going live tonight instead of yesterday, because I think it's much more crucial to discuss the outlook for tomorrow and looking ahead to the first week of October, right? Heading into October. Obviously, much bigger headlines today than yesterday, so I think it worked out good that we're going live today. It's a very crucial night to go live. So you give it another 30 seconds. Let people dive in. Obviously, anyone who shows up late, you'll be able to play this back once we're done with the live session. I just want to go over a couple crucial market headlines that everybody needs to be aware of. And normally you don't have to be too worried about the news, especially as a technical trader. If you're a day trader, or just in general, you follow the flow in the technicals. I would say, majority of the time, it's not crazy important. It's certainly helpful to understand what's going on with the major news headlines, but right now this is a very news headline driven market because we have such massive news headlines that we have to pay attention to, because there are things in the market right now that at any moment we could have a news headline drop that is going to just completely change the outlook for the market in the short term and the long term. And that's why we're seeing the aggression to the downside. We talked let's go ahead and let's dive in. Let me see who's here. Hey, what's going on, guys? Welcome. Glad you guys showed up. All right, let's dive into things. All right, let's just dive right into the market. So, we talked about last week when we went live, and this Sunday, we talked about the 20-day moving average on SPY being an extremely crucial level to reclaim for the bulls, right? We talked about this, this 447 area on SPY, that for the upside to push, we need to reclaim that level. And that's all well and good. That still holds true, but it's what is driving the bulls to make a move like that. And right now, we have to ask ourselves, why has this not happened yet, right? We look at the past 15 months on SPY, and we see this beautiful uptrend defending the 50-day. Even when we snap below it, we reclaim, and it's been a smooth ride up until now, right? So what has changed? What is going on right now? And obviously, as we talked about, it's those news headlines, those big ramifications in the market. There is a lot of uncertainty in the market right now. Obviously, it looks like things will become more clear, but it's not just one headline, right? So let's just dive into the key headlines today, okay? Today we had Congress pass a bill that will financially support the government, and I believe it's also supporting Afghanistan, pulling out anyone who needs to get out of Afghanistan, any Americans, and hurricane relief. That's it, those three things. This bill really, to be honest with you, is not a big deal at all. It's only a big deal in the sense that, if anything, I think maybe that's why we saw this aggression to the downside even going into close. I think maybe it gives us a little sense of there is some panic in Congress, because think about it. Why would they be so antsy to get a deal like this done if they're going to resolve this debt ceiling crisis, right? If they weren't worried about this debt ceiling crisis, all of that would be resolved when they vote on that, right? So this is almost like a blanket of hedging for the worst case scenario of the outcome of the debt ceiling crisis. And so I think that was more telling to the downside than the upside, if anything else, right? Initially, it seemed bullish, but the more I've been looking into it, I don't think that's the case at all. And so we talk about those bulls needing to reclaim, and then we have this debt crisis. And so what happens? We end up closing right around those lows from the Evergrande crisis. And what is so important about this is that we close below the 100-day, and it is our second time testing below the 100-day. And there is no resolve in sight, all right? So just I'm going to give you guys a quick summary of what is going on in Congress. Obviously, I'm sure a lot of you guys are following the news and you have your own take on it. But basically what's going on is with this $3.5 trillion infrastructure bill that the Democrats want to pass, it is putting the government over its debt limit, right? And so Congress needs to either revise this bill, which is what the Republicans are waiting for. The Republicans in Congress and in the Senate are basically putting their feet down and saying, no, we're not going to just keep raising the debt ceiling. You guys need to revise your bill. This is ridiculous. We can't just keep raising the debt limit. And obviously the Democrats don't want to budge. They like their bill that they put together. And it's kind of a classic, like Texas standoff, right? Like it's just kind of waiting to see who's going to blink first, who's going to give in, or is there going to be some kind of bipartisan agreement, some kind of side deal that gets worked out before that October 18th deadline. And I think the closer we draw toward, obviously into tomorrow, last day of the week, and then heading into the start of October. So as we talked about, SPY closing below the 100-day, that's important. But let's get to the second part here, because this is really what I want to drive home. I think that we can anticipate, as we draw closer to this October 18th deadline, bearish sentiment with general chop until this issue is resolved. Because as I said a couple minutes ago, it's not just the debt ceiling crisis. It's the continued rise in jobless claims. It's issues with Democrats wanting to pass laws that would tax Americans on their unrealized property gains, right? These are very serious bearish headlines. That's a whole nother story that we can dive into in another day. But basically, Janet Yellen has been going on this whole rant in Congress that the wealthy are able to get untaxed because of their property gains that are unrealized until later on down the line, and then it never gets taxed. But I think what she doesn't realize is that millions of middle-class Americans also have unrealized property gains that they cannot financially pay taxes on because it's only value in terms of property. They don't actually have the cash for it. So it's this whole big thing, right? And so we start talking about the Delta variant, and we start talking about inflation is still a concern. And Jerome Powell keeps dodging questions about inflation by saying that as long as we take care of the Delta variant, we're going to be okay, right? You have that. You have this debt ceiling crisis. You have all these things stacking up, and all of a sudden you start to understand why this sell-off is so much different than any sell-off we've seen in the past year and a half. Okay, because up until about, I would say 6 weeks ago, everyone kind of thought that, okay, the vaccine's great, we're good, we're riding up to highs. COVID, we basically kicked COVID's ass, right? It's just like we left off before COVID. And then the Delta variant happens. And then you have all these financial issues in the economy. And look, guys, I would love to tell you that I believe that the market is going to bounce back to the upside, or that I think the market is going to tank. My honest opinion on this is that we have room on SPY down to 410, the 200-day moving average, just from a technical perspective. But more important than that, I really want to drive home with this live session tonight, guys, that if you are a swing trader, this is not the time to be aggressive, okay? This is not August, right? In August, or was it July? July, August, around that time, around Q2 earnings, I believe it was Q2 earnings, right? When we started, the market was just pumping like crazy, and it was basically just buy a call on whatever company is showing relative strength, hold it for a day or two, and make 50 to 100%. This is not that market. There is no clear direction. There is downside sentiment, right? But we always have the possibility that we could all wake up to 6 a.m. that Congress decides to come to a bipartisan agreement all crises are averted, or some kind of Jerome Powell headline, right? So this is not a normal market for swing traders. And I'm even talking about the downside. Even though on paper, from a technical perspective, the downside looks very tantalizing right now, guys. It looks beautiful. The past 3 sessions, it's basically been let stocks trade up into their resistance, short them if you're ballsy. If not, wait, let them retrace to the downside, pick up the lows and ride it through to lower lows, right? It's been a beautiful day traders market the past couple of days for the downside. That does not mean that there is a clear swingers market right now, just because there is opportunity to the downside. And so I really just want to drive home that if you are a swing trader and you are looking to be consistently profitable, and whether you want to do this full-time, or more than likely if you're a swing trader, you have some kind of full-time responsibility. And so you're looking to swing trade because you cannot stare at the market all day and day trade, right? There are times in the market to put your foot on the gas, and you're going to make, let's say, $5,000 in 1 week. And let's say your monthly goal is $3,000. You just hit almost 2 months worth of profit in 1 week. That's awesome. With that in mind, if that is true, the inverse is also true, that you cannot sit down and write out your goals and get obsessed with your goals and tell yourself, I have to make at least $200 a day so that I can hit my end of year goal. I have to make at least $500 a day. I have to finish the week with at least $2,500 profit, because there are times in the market like right now where it is simply not plausible to be swinging with a lot of size. Now, if you want to swing, one put contract, and typically you swing 3 or 4 contracts every night, and right now you swing 1 or 2, that's okay. But really the point I want to drive home to you guys is that there are times in the market where you're not looking to necessarily make a killing. You're not looking to smash your goals that you have set out for yourself. You're simply looking to survive until we get clarity. And right now is the time that you're looking to survive until we get some clarity, because I feel pretty confident that once this debt ceiling crisis is resolved, we're going to get clarity. We're going to have a pretty solid idea of the short, medium term, the sentiment of the market. And so now we let that timeline pass through. And now let's go ahead and let's swing normal size. Let's hit our daily goals. Let's do all of these things. And so I just really want to drive that point home, because I know myself, especially when I was a newer trader. And listen, even now as I'm becoming a more and more experienced, disciplined trader, I still have times where I tell myself, you need to make this specific number every day. And I think sometimes it's important to realize that it's better to make like $100 or even $0 than it is to lose $1,000. I think that's kind of the point I'm trying to drive home. And I hope this isn't repetition, because I'm sure you guys have heard this all over the place. And look, I'm not advocating for don't play the downside. Don't mistake this for a cry to the bulls that the market only goes straight up. I love trading the downside. I simply want to drive home that we need more clarity before we can feel comfortable swinging overnight positions with a lot of size. Because the last thing we want is a big news headline pre-market. You short the market down here because on paper we have very nice downside, and then it just takes one news headline and next thing you know we gap up to 443 and your contracts are down 95% at open. And so I really just want you guys to take care of your capital and just remember that there are times in the market to go crazy and there are times in the market to protect your capital. Right now is one of those times as a swing trader to try to err more to the side of caution. With that whole rant out of the way, and I apologize, guys. I really want to see everybody succeed, and I really hate to see people get burnt out in this market because they have goals and aspirations, which is a great thing, but you have to temper that with discipline, right? And so I just really want to see everybody succeed. So I wanted to make a key point to discuss this on this session tonight. With that being said, obviously technology is a dumpster fire right now. I forget who said it. It was some head CEO of financial banking. I'm not even pretend I know exactly what I'm talking about. It was a pretty important guy, right? That's the key point. Shame on me for not doing a little more homework. But I was reading this article on Yahoo Finance, and he was talking about how basically all of big money kind of understands right now that over the past year and a half, technology has just been pumping like a freight train. And it's at the point now where even though you can be bullish on technology long term, but regardless of how you feel about technology long term, in the short term, it is very overpriced. These valuations on the companies just don't match with how much the stock prices are being traded at on the big companies. And so you're seeing a very large pullback in technology. And as we approach, a break below the 100-day, let's keep in mind, guys, even though we're selling off, there is still room to the downside. Okay? I think the best way to put it, let's go back to the SPY chart. I think that this market over the past year kind of showed that there is a very strategic mathematical way to attempt to catch the bottom of a falling knife, right? And so a very popular term in the trading community is don't try to catch a falling knife. And what that means is just because the market sells off, don't try to buy the dip just to buy the dip, right? Because the next thing you know, the market continues selling off, right? You try to buy the dip on the 20-day, boom, it comes down to the 50-day. But in your head, you were like, it has to hold the 20-day, right? And so next thing you know, you tried to catch the falling knife and it cut right through your hand, right? You did not perfectly time the bottom. But with the past year and a half of this market, we've been able to pretty nicely time the bottom of these dips, right? We have used the 50-day as strong support. And so now at this point, even you go to last week or a week or two ago, that Evergrande sell-off, we used the 100-day as a perfect way of identifying the bottom of the sell-off. Well, now we're coming down on that second test within just, 1, 2, 3, 4, 5, 6, within 8 or 9 sessions. Now we're closing below the 100-day. There's still great room to the downside. And so if you're a dip buyer like myself, I love buying the dip and getting things at a discount. Just be cautious that there is still a lot that could get played out in the news and in the economy right now. And it is not absurd for us to trade down to the 200-day. I'm not saying that it's going to happen. I'm just saying that it's not a guarantee that we just bounce off this 100-day moving average and shoot back up to the upside, right? This is a time of uncertainty and caution. If you're a day trader, be very, very disciplined. And if you're a swing trader, be disciplined and then do it again times 10, okay? Because this is just not the time to be going crazy with all the uncertainty in the news today. So today's session was very much a kind of, I guess, kind of just a speech from myself to try to err everyone on the side of caution. With that, I'm kind of done with everything I prepared and that I wanted to go over with you guys. And so I'm reading through these questions here as I was talking, but as I'm reading through these questions, if anybody has any other questions, just go ahead and pile them into the chat. Anything at all. Anything goes. Speaking of swinging, I haven't seen very many gap ups, downs in the last few days. That's just my anecdotal view on swinging right now. Yeah, because when you have certainty in the market that a big money's going to drive it in the direction they want, but there isn't that certainty in the market, and so you're seeing flat opens and you're seeing resistance. I can tell you guys, I've been getting pretty serious into futures trading, still options trading, but I've really grown to love futures trading. And a very common pattern I've noticed lately is that we're sort of having a very, very tiny gap up before just smashing through the lows. And even at the opening bell, we're running up into support, into resistance, and then rejecting and then smashing through the lows. So that works, right? If you want to try to play the reversal, absolutely works. Just have your news apps on, just be following what's going on in Congress, and let's be very disciplined and very smart, because as much as I've been preaching about stay disciplined and this is not a time to have your foot on the gas, when we do get whatever kind of resolve we get from this, I guess you could call it debt ceiling crisis, inflation crisis, all of the above, whatever you want to call it, all of those things, when we do get resolve from this, we're going to get more than likely a very trendy, volatile, high volume market. Right? We're either going to get bearish headlines and the market's going to rip to the downside. We're probably going to get halted because it's going to be so absurd. And that's awesome. Let's capitalize on that. Or everything works out and everything was just a big overreaction, right? And we rip back to the upside. Awesome. Let's capitalize on that. Until then, let's stay patient and let's wait for that opportunity. UPST overextended. UPST. Yeah, I mean, it looks like it's kind of bull flagging right now, and it's holding on to support pretty nice, even though it is pulling back a little bit here. I would wait for confirmation before trying to short it, right? So Santino, I wouldn't try to short the peak here. Like tomorrow, if we open flat, I wouldn't say to myself, this thing's overextended. Let's short it at 320, right? I would kind of say to myself, let's wait for confirmation. Does it come down to the 20? Okay, cool. Let's wait. What does it do? Does it bounce? Or does it close below the 20? It closes below the 20? Okay, it's game on, right? Let's trade this thing down to the 50 potentially. Awesome. Until then, let's be a little patient because otherwise we're just getting little tiny candles with low volume, right? So let's wait for the volume to step in and let's see, does it blow the top off of the highs or does it start breaking down below this 20-day and the sellers step in with aggression, okay? Right now we're kind of at a middle point where we're waiting to see, do we start to sell off and rip to the downside or do we keep consolidating until we break out to the upside, right? I would say right now is not a very good time to trade either side, just from what I'm seeing on the chart. But while I'm waiting for you guys to throw some questions out, I'm just going to go over some popular names for individual stocks. Obviously, we talked about the overall market, but, kind of same thing with Apple, right? We're kind of building here, third day in the past 2 weeks that we've kind of held on to 141.4, and we're just sitting there. For me, I'm looking at this 140.2 area. If we start crashing below the 100-day and confirming lower and not using it as support, then I want to capitalize that and write it down. Because if Apple starts doing that, then it's probably an indication that the overall market, SPY, NASDAQ, they're also breaking down below their 100 days. And so from an individual company perspective, if I want to capitalize on the market turning red really quick, I'm going to be looking at Apple to start breaking down below their 100-day moving average. Tesla kind of doing that bull flag thing as well. It's not really breaking down. To be honest, guys, I kind of want to leave Tesla alone right now because from a technical perspective, it kind of looks nice to the upside, right? Like it's bull flagging pretty nice. It looks like that even 800 number has potential to go parabolic, but what is really its upside potential? Like, given the current market climate, right? If the market rebounds, then completely disregard what I'm about to say. But if the market keeps on trending lower and you see SPY and NASDAQ closing below their 100 days and moving towards that 200-day, what is the upside on an 800 breakout from Tesla? Can I really realistically expect Tesla to put in one of those iconic $40, $50 moves on a key level breakout? Right? Because if the overall market was bullish right now, I'd be sitting here and saying this is one of my favorite setups across the board, an 800 breakout on Tesla. But I imagine, and this is just me speculating based on the market conditions, you're going to see exactly what happened off of the 765 breakout. You're going to see a $20, $30 move, except I don't even think it's going to be that nice. I'm thinking more like a $10 breakout, and then it's going to retrace to the downside. Now, this is pure speculation based on the overall market. I just don't think the bulls have enough juice to push this thing higher as the overall market is trending lower and lower. And so I'm kind of leaving Tesla alone right now. But Tesla is, just like how I'm watching Apple, very close to the downside based on how the market reacts off of news headlines. I'm watching Tesla very close as well for a breakout because it has a lot of relative strength. You're seeing this very nice overall strong uptrend over the past couple months. Despite the market moving lower the past 2-3 weeks, it's holding its own and it's putting in higher highs. So it's definitely a name to keep an eye on if any kind of crazy bullish headlines drop. Outside of that, not a name I'm probably going to trade anytime soon, but I do want to take a look at Roku just because I know we talked about it before. Yeah, nothing's changed. Rest in peace. I did see some interesting flow on Netflix today, and it looked like it was a scalp. It was a couple above the ask, weekly expiration, 1 day until expiration, out of the money call buying on Netflix. And one order was like 30 seconds into open and one was 90 seconds into open. And it looked like the premiums doubled off of this breakout up to 620. But it kind of put in that shooting star. And this is another setup, right? This is just like we talked about with Netflix. You're looking at this 610, 615 area. This is a very nice bullish chart. But it's already been on a crazy run. And now on top of that, you have the overall market trending lower. What is the upside on this breakout? You can't really expect Netflix to put in a $10, $15 breakout when the market is getting obliterated. Even if it does have a lot of relative strength, you kind of have to manage your expectations on breakouts. Now, if this was a downside setup, it's trending with the direction of the market. Now you can expect a pretty nice move on it. Unusual put flow on Tesla 720 puts. What was the size on it? Oh my god. Yeah, I'm pulling up the app right now. I just want to surf through the flow. I went through everything a little bit before. Awesome. I went through everything right before I went live. I didn't see anything too crazy though. And I think that kind of is because of what I started this live session talking about managing your expectations right now and not looking to make a killing during this phase of the market, but just survive it until you get the opportunity to kill. And I think you're kind of seeing that in the flow market right now. The institutions are a little wary. Obviously, significantly more put flow than call flow. You're seeing them capitalize on the downside, but just, you're not seeing the aggressive amount of flow that you would typically see in a high volume market. And so I'm just speculating that they're picking and choosing their opportunities to short the market, but overall they're kind of staying cash right now is my running thesis with big money. I truly believe that they're staying cash until we see some kind of economic resolve in the news. Yeah, but honestly, that's about it, guys. I don't see any reason to hold you guys here too much longer than you've been here, unless quite a few orders over 1,700,000 strike as well. Let me pull it back up. But guys, I've gone over everything I wanted to go over. Again, if you have any questions, go ahead and drop it in the comment section, and I'll definitely address it. Other than that, I'm going to take a look at this Tesla flow, and then I'm going to call it a night. Get prepared for tomorrow morning. Sweeps, bought, puts, OTM. Yeah, some pretty nice size. October 8th put buying. 725s with a 778 spot. Yeah, I mean, we talked about this, I think, I don't know if it was last week or if it was, I feel like it was a week and a half ago, maybe early last week. We talked about how Tesla had, I know it was before it was before the big 7, or was it the 765? No, it was the 780 breakout. Yeah, we talked about how as they were approaching this 780 breakout, there was an absurd amount of put buying, and yeah, no problem, man, no problem. There was an absurd amount of put buying in Tesla as they were trending up, and it was very unusual because it wasn't like hedging, like in the money put buying. It was short-term expiration out of the money above the ask, and I wonder if, as strong of a run it's been on, if they're anticipating a correction soon, maybe down to the 20, maybe it rips through the 20 and we come down to that 50, right? Because if it comes down to the 50, that's right around the strike price of the current put buying that we're seeing in the market. And so definitely something to keep an eye on. If Tesla starts coming down below its 20-day and starts confirming lower, there's definitely some opportunity here to the downside. It's just that we're still a good ways away from that. We're going to need a $20 drop, ideally a close below the 20-day, and then the day after they close above it, you want to see it trend lower. But that's going to do it, guys. Appreciate everybody hopping in. Everybody have an outstanding night. If you have any questions about trading or anything in general, if you just want to shoot the shit, just hop into the Discord and let's kill it tomorrow, guys. All right, everybody have a good night.